Hello and welcome back to another episode of Financial News and Your Money. My name is Paul Munichel. I'm a financial advisor with Ameriprise Financial, and Ron Jankowski, my co-host, is off today, so you are stuck just with me. I'll be reporting the information that Ron normally reports in our shows in his absence. And today's recording is done on Tuesday, June 20th. So data is as of that date. I'm going to go ahead and dive right in. I'm going to talk about the housing market and how housing is unlikely to offer a near-term downside. So although we believe recession odds remain elevated as we look into the second half of the year, at least one key sector is unlikely to contribute to any downside we might see. In 2022, a contraction in residential construction activity shaved 0.5 percentage points off U.S. real gross domestic product, GDP, growth according to the Commerce Department. Now, a drop in activity in this sector is almost always a contributor to economic downside during recessionary periods. However, after last year's downturn in the space, activity has been stabilizing, a trend we believe capable of continuing. At 8:30 a.m. today, the Consensus Department will release its figures on new home construction for the month of May. Now, we forecast a 1.4 million, that's an annualized rate, new housing units to have been started in the month, which would represent a year-over-year decline of about 9%. Now, though down, May's projected year-over-year rate would be a considerable improvement over December's year-over-year decline of 24%. So we have a lot remaining to see in residential. There's a lot of activity and things are looking like they're changing, but total residential construction spending has been stabilizing in recent months as demand adjusts to the recent jump in mortgage borrowing costs. Housing, especially in the existing home market, is still historically tight and is likely to remain so for quite some time in our view. Data from yesterday's National Association of Home Builders housing market also provided evidence of improving conditions. Overall sentiment jumped 5 points as builders' sales expectations for the next 6 months jumped 6 points. So lots going on in the housing market, lots to be aware of and lots to take note of. I'm going to move on to the portion of the show where Ron gives a few bullet points on what is expected in the near-term market and then the overall market returns year-to-date for some of the main indexes. So diving into that data, the U.S. stock futures, they're lower this morning, again Tuesday morning, but off of the session lows in a holiday-shortened trading week. Overseas, markets in Asia ended mostly lower, led by Hong Kong, which was down 1.5%. Property stocks especially weak over there, and Japan was flat. We've got Europe trading lower in midday. Switching over to bonds, we have U.S. Treasury yields. They're modestly lower to start the week, with the 2-year at 4.69% and the 10-year at 3.75%. And Bitcoin futures, they're up nearly 1%. We got gold down 0.4%. And we also have WTI crude, it's flat, at just under $72 a barrel, following last week's 2.5% gain. Now your index returns, these are year-to-date average numbers. S&P 500 through last week, positive 15%. Dow Jones, positive 4%, and the NASDAQ still leading the way of the big three indexes, up 31% on the year. So that's going to conclude the first half of today's show. Stay with us. We'll be right back, and we will hitting a Your Money topic, dealing with, we're going to talk about real estate. So stay with us. We'll be right back. All right, welcome back. Thanks for staying with us. Today's topic we're going to hit is your financial guide to inheriting a home due to a death in the family. So let's dive in. If you stand to inherit a property, such as a family home or a vacation condo, the gift presents a critical financial decision, whether to sell, rent, or keep it. Now, while the inheritance itself may be a blessing, often it's the result of losing a loved one who's passed away, which could complicate matters from an emotional and practical standpoint. Do you wish to hold onto the property for sentimental reasons? Or is it financially possible to maintain if you already own or rent a residence? And do you own it outright, or sometimes it's a split inheritance with other beneficiaries, brothers, sisters, whose own financial situations and priorities will need to be taken into account? Sorting through these and other questions can feel overwhelming. But don't let that stop you. As with most major decisions, it helps to start with the facts. So today, we're going to give you some steps to consider. Step number 1, set up an appraisal to learn the property's value. You can hire a professional appraiser who can determine the fair market value of the property on the date you assumed ownership. Having a solid idea of the value can not only help you decide whether to sell or keep the home today, but it can establish a cost basis should you decide to sell it in the future. Consideration number 2, calculate the cost to maintain the property. So if you decide to keep it, the property's mortgage payments, annual property taxes, utility bills, they're going to be your responsibility. But it doesn't stop there. Make sure to factor in other regular expenses, such as yard maintenance, snow removal, housekeeping, to get a realistic picture of what it will take financially to keep the home. Also, if in doubt, check with your attorney to ensure there are no tax liens or other assessments on the property. Consideration number 3, determine your ability and desire to maintain the home. Do you have the time to handle the upkeep? Additionally, think about how you'll manage the property in retirement if you're unable to perform maintenance tasks yourself. As you work through these actions, we're going to give you some additional considerations that come with the decision to sell, rent, or keep the home. So let's start with sell. Parting ways with family home can be emotional, even when you know doing so is the right decision. Give yourself time to prepare the home for sale. This way you can sort through your loved one's belongings and find closure at your own pace. When the time is right, a cleaning company, home staging services, and a realtor can potentially help you put the property on the market. If you make a profit on the sale, apply the money towards your financial goals. The extra sum can help make your goals of retirement or college for grandkids or estate plans a reality. Selling the home could have tax implications that vary state by state, so always talk to a tax professional for guidance. Now, maybe you choose to rent the property. So if renting the home is appealing to you, research what the rental market is like in your area. Determine if a reasonable monthly rental price provides enough cash flow to cover upkeep costs. Hiring a management company to clean, make minor home repairs, or manage the rental process may be attractive, particularly if the property is miles away from your primary residence. Additional tax considerations may apply depending on the number of days you use the home versus rent the space to others. Again, consult a tax professional to understand if and how your tax situation may change. You should also determine whether the property is subject to rental restrictions related to local ordinances and homeowners associations. And the third option, if you decide to keep it, the ability to continue family traditions, have a future retirement space or a vacation getaway, may make keeping the home the right decision for you. If you're sharing ownership with a sibling or another family member, it's critical to clearly communicate, ideally in writing, how you will split the financial and maintenance responsibilities. If you inherited the home outright, the choices are yours to make. Consider the following financial steps as well. You can potentially purchase home insurance if the property has a pool, trampoline, boat, or other recreational items. You may need additional coverage. Also, save strategically for a remodel or upgrades if you want to adapt the home to suit your family's lifestyle. And also, update your estate plan. If you intend to keep the home in your family for another generation or two, don't wait to prepare your legal documents. Advanced planning can help pass the property smoothly to your inheritors. As always, have a conversation with your beneficiaries so they know what to expect. In conclusion, making decisions after the loss of a loved one can feel overwhelming. It's okay to take your time and ask for help with choices along the way. Guidance from a realtor, attorney, and financial advisor and tax advisor may help you be thoughtful about how the inherited home fits into your lifestyle and financial plan. And as always, if you're working with a financial advisor, that's great. If you are looking for a second opinion or to start a new relationship with an advisor, feel free to contact me directly. My number is 708-226-3412. And that's going to go ahead and conclude today's show. For myself, Paul Munichel, and Ron Jankowski, who's off today, we wish you a good investment day, and we will be back next week with some new topics. Have a great week.